Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates and 10-year note yields. Surprisingly, still very much steady post FOMC. Recall we were trading around 308 yield when the Fed announced that they were going to raise rates and gave their forward guidance, and everything looked great for 2019, and the market just sort of consolidated. We did see a dip decline slightly. We did see yields get down to about as low as 304. Then they came back up. They're very near unchanged where they were when the Fed announced on Wednesday, and that is a bit surprising given the fact that some of the data in between has been mixed, but ultimately there wasn't a knee-jerk reaction that stuck, and the market right now remains in that range, albeit at the high end of that range. Going back to May, we have basically we have 275 up to 310, and we just have been unable to really break out of this range, and the market continues to just kind of find a way. We've had 4 consecutive weeks, Fridays, of settling higher, and today we ended that streak. So maybe things are going to head back towards the mean. That's probably the highest probability, at least at this point. We do have some key events coming up on the calendar, but nothing I think that will shake us until we get a bigger catalyst moment. And market volatility, as you can guess, has been getting crushed since the Fed. We actually saw it trading a modestly higher, a tick, nudging higher ahead of the Fed on Wednesday. It has been nothing but decline since Wednesday, and we'll go into the weekend likely testing the year-to-date lows. So right now, Treasury volatility, not an issue, at least not on anyone's radar. And lastly, let's look at what we have next week. We have the employment figures. Obviously, that's always been the biggest part of the biggest trade of the month. And we also get Mr. Powell, who spoke at the presser last week and then had a follow-up next week at the Business and Economics Conference, on the 2nd. So he is going to be speaking. I like the timing of this because it gives him a chance to clarify any uncertainties in his speech from last Wednesday. I don't think there is any uncertainty, but maybe the curve, which has gotten flatter since then, maybe the equities, which have gone higher since then, and bonds, which have kind of been spinning their tires, he will clarify perhaps his 2019 expectations, perhaps something off the balance sheet. I don't foresee there any reason for it, but he is going to be speaking, and all eyes will be on him, and then obviously on the employment report for next week. So right now, bond market still holding the range, volatility low. Doesn't look like a breakout's coming on the horizon. This is Todd Colvin coming to you from the floor of the CME Group.